Hey guys, it is me. It is TK Barlow from the Barlow Group tax and accounting firm. So listen, welcome to this masterclass. Today we're talking about help. I am a Medspa owner. How do I pay myself? Okay, so just to give you a formal introduction, just in case we have not been introduced before. Again, my name is TK Barlow. I am the owner of the Barlow Group tax and accounting firm, and I love being able to help wellness entrepreneurs just as yourself to be able to lead you and to walk with you on your path to success through giving you proper bookkeeping and accounting. All right. So at our firm, we do it all. We do accounting, tax planning, tax preparation, all of that good stuff to keep you organized and tax time ready. Okay. So today's goal is for you to be able to walk away knowing the correct way to pay yourself according to your business entity. I'm going to share with you 5 major habits that could be hindering you from being able to pay yourself. We're going to talk about other important numbers you need to know in order to begin to put yourself on a pay schedule. And then I'm going to share with you 3 tools that you need in order to stay consistent. All right. So let me tell you also, this is with these webinars and these masterminds, I really like to keep it a little low key and not so formal. All right. So instead of calling this a webinar, we're going to call it a chat because that is what we're doing. We are chatting. Okay. And so if you are watching this on the replay, you're still able to join us and be able to interact with us. You're able to just go ahead and put down any questions that you may have in the comment box. Or if you need to email me, you're able to send me an email as well at hello@tkbarlow.com. All right. So let's jump in. So I've shared some things about myself. So I want to hear from you. Why did you choose to become an entrepreneur in the first place? What was the thing that really motivated you to step outside of that normal, just only your 9 to 5, and be able to branch off and say, hey, you know what? I really want to dip into the entrepreneurship pool. What was that thing that motivated you? And so some of the answers that I often hear is, you may have decided to start your business because you wanted to end a struggle. You know, a lot of 9 to 5 people are living paycheck to paycheck. So maybe your reasoning to become an entrepreneur was to, generate more income. Or maybe your reason for entrepreneurship was to get outside of that 9 to 5, with people telling you what you can and what you cannot do with your time. Maybe your reasoning was to have more family time, to have more time with the children, right? And so a lot of entrepreneurs have different reasons of why they decide, to break those chains of just that 9 to 5 and really step out into entrepreneurship. But some of the things that you will not hear, right? And I'm sure that you guys did not put this in the comment box, which was, to continue to stay broke. Nobody is saying that, right? Or to continue to struggle. No one is looking to get into entrepreneurship or start their own business to continue to struggle, right? We're not doing that. And no one is probably going to put the reason, to stay broke, right? Nobody wants to start a business just to stay broke. And so everybody here today has that one common goal, which is for you to start or to learn how to start paying yourself from your business, right? And you could be in different phases. You could just now started your business and you're trying to get the tools that you need to be able to pay yourself, or you could have been in business for years, right? And you're just now learning how to really pay yourself consistently in the correct way. So again, I want to welcome you. And so what we're going to do today is we're going to figure out what your baseline, right? What is that number that you need to get to, or what is that ideal number for you to start at when it comes to paying yourself from your business? You at least want to have a starting point, right? And so that is what we're going to discover today is your starting point, right? So before we jump in, I want to tell you a story about a client that I had. Her name was Kim. And Kim started out in her business, just like a lot of us do. We start off very passionate, we're driven, and we are just simply ready to conquer the world, right? And so Kim she had a bakery. And so a lot of her business growth, she's seen a lot of growth within her first 18 months of business, which is something that is really, that's really, really good. She saw from the day she launched to those next 18 months, that was where she generated a lot of business. But despite of her early success, Kim really found herself in that financial loop that a lot of us are in, to where we are making the money, but then we are reinvesting it back into our business. And we're not considering the fact that we need to be paying ourselves some type of compensation, right? And so Kim business it was really, really thriving. We looked over her financials, and her personal account did not match what her business account was doing, right? Her business account was really thriving, but when it came down to her personal bank account, it was not the same story. And it was because for many years, like 3 years out, every penny that Kim made, she put it right back into her business. And a lot of us do that. She hired assistants, she hired an accountant, which was me. She hired she hired that year. She hired a marketing person. And so she hired a lot of people. She upgraded a lot of her equipment, and she expanded her services as well. But while she was able to celebrate, the big contracts, her clients praised her. Her clients was really, really happy with her service. But Kim was so focused on growing her business that she really neglected to pay herself. So how many of you guys are in this same boat, or are wearing these same shoes to where you're making the money in your business and you are reinvesting a lot back into the business, and you're just not paying yourself? This is where a lot of entrepreneurs are. And so we had to explain to Kim that just because you're not really paying yourself from your business, like, you don't want to neglect compensating yourself just because you are afraid that if you withdraw anything for yourself from your business, that is somehow going to jeopardize your growth. Like, that was her mindset. That is what she believed. And so we met with Kim and we explained to her, hey, you not paying yourself a wage is going to be really risky for you, for your personal well-being. And then as well, how could that really impact? Like, she wasn't looking at how that would impact her business credibility. When you're trying to get loans, or you're trying to apply for grants, when they see that you're not paying yourself, that makes it look a little, lopsided there. And so, of course, Kim hesitated, but then she eventually agreed she eventually agreed for us to put her on the plan to where she was really able to increase her pay. And so what we did was we kind of went out to the market to see what was a good rate or a good pay that would be something, that she would be able to take from the field that she was in. And so there were some things that we had to tweak with Kim. She had to streamline her operations. She had to focus more on her margins. And then she really had to be clear with her business numbers, right? And so as she started to pay herself a reasonable salary, a couple of things really began to happen for Kim in her life. And she started paying herself. So that gave her a different quality of life, right? That gave her a better quality of life overall, because she was able to enhance her work performance. She felt less stressed. She felt more valuable in her personal and in her profession, right? And so this shift led to improved business profits, and everybody wants a business profit, right? That is what we all want. We want a business profit. And so as we move forward today in this masterclass, I really want you to think about, how would consistent pay improve your quality of life? What would you do differently? What are you doing now that you could do differently when you have this consistent pay from your business? How is that going to improve your life? Are you going to take more vacation time with your family? Are you going to share, more special moments with your parents? Like, what are you going to do differently? Are you going to take, maybe even some vacations on your own by yourself? Are you going to go to more conferences to where you're able to improve your skills? Like, what are you going to do? And how is a consistent pay? How would that really improve your quality of life? So I want you to think about that as we go through this masterclass, okay? All right, but before we dive in, I do want to go over a few vocab words just to make sure everybody is on the same page and that we all know exactly what we are talking about as we move in and out of this masterclass or our chat today, right? So, owner's pay. Owner's pay is simply the amount of money a business owner pays themselves from their profits of their business. So, obviously, we're going to talk about owner's pay on today. All right. So your cash flow. Your cash flow is the movement of money in and out of your business. Okay. Gross income is everything that comes into your business. Expenses is everything that goes out of your business. And your net income. I want you to remember this equation here. Net income is everything that is left over. All right. So that is going to be your gross minus your expenses. That is going to leave you with your net income. And that is going to be very important with our chat today, okay? So let's first talk about owner's pay. All right, owner's pay is it's a word, and it can be used in different ways, and it really depends on what type of business structure that you have established for yourself, right? So owner's pay, it means the same thing. However, how you do it or how you take out your owner's pay, that is going to be the difference depending on your business entity. So let's look at a sole proprietorship and a single member LLC. Now, these two are kind of, they operate very closely, right? So the only difference is the LLC part. And the LLC is the limited liability company. That's what that means, limited liability company. So when you first start your business, like a lot of entrepreneurs, when they first start off, they may not have the budget to go ahead and establish their business as an LLC. So they operate as a sole proprietor for maybe like a couple months to a year. And so I want you, if you're in this situation to where you just started your business, it's important for you to go ahead and establish your business as a LLC, because what's happening is you have that limited liability. So let's say that you are sued for whatever reason. We don't want that to happen, but just in the case if you are sued, if you are operating as a sole proprietorship, then your personal assets could, be vulnerable for a lawsuit, meaning like your home, your vehicles, or anything that you own. Now, if you are a single member LLC, then you are putting that limited liability on your business. And so therefore, if you are ever sued, in the case of a lawsuit, then they will only go after your business assets. But if you are operating a S Corp, a C Corp, a partnership, now those are going to look a little bit differently, okay? If you're operating an S Corp, we hear a lot on TikTok about being S Corp, being S Corp. But the truth is this, there are a lot of moving parts when it comes to taking the S Corp election for your business. But one thing that I want you to remember here is that you have to take a salary if you are going to operate an S Corp. You have to take a W-2 salary, meaning like you're putting yourself on a payroll, all right? So you have to do payroll for yourself, and then you are also able to take shareholders' distributions to where you're able to make a simple transfer from your business to your personal account, just as you would if you operate a sole proprietorship or a single member LLC. You would just take whatever you're trying to pay yourself, and you can take a transfer from your business to your personal as an owner's draw. All right. So you can do it that way. You can write yourself a check, however you want to do it, with a sole proprietorship or a single member LLC with distributions. So if you are an S Corp, you have to put yourself on a salary, and you can also do distributions too if you want. All right. Same thing with a C Corp. A C Corp, you have to have yourself on a salary, but you're taking dividends at the end of the year. Now, with a partnership, you're taking owner's draw, and then you are also able to take the shareholders distributions as well. All right. So if you are a single member LLC or a sole proprietorship, you're paying yourself with a check or with a transfer from your business to your personal. Okay. Then if you do cash, you really want to stay away from doing cash, because it's gonna, you have to make sure that you are tracking that cash. If you so you could track it through a good bookkeeping system. However, it's probably easier for you to just make a transfer, and then those transfers are automatically recorded so that you have a paper trail. All right. And then again, if you are an S Corp, C Corp, or partnership, you're going to do it a little bit differently to have yourself on a payroll. If you are an S Corp or a C Corp, and you would take a shareholders distributions, you would take dividends. But if you are a partnership, you're going to take an owner's draw of, right? And you're going to take a shareholders distribution maybe at the end of the year. Okay, so that's how that works when it comes to owner's pay. Okay, so now I want to talk about some other things that we also encounter, and then these are the pitfalls, because there are definitely pitfalls when it comes to paying yourself, right? And there are things that we do as entrepreneurs, that will definitely keep us from being able to pay ourselves consistently and the right way from our business. And if you are very honest with yourself right now, there could be some habits that you're doing right now that are just not going to work when it comes to paying yourself from your business. And it's totally fine, because, I have been guilty of some of these too. So listen, so having everything going into one account is a sure way that would hinder you from being able to pay yourself consistently. So how many of you have heard of the terminology co-mingling? So you can put you can give me a me in the chat if you have heard of the terminology co-mingling. So basically what co-mingling is when you do not have separation between your personal and your business accounts. This is co-mingling, and you are bound to miss tax deductions. And I know this from experience, guys, because I was an ex co-mingler in my first business. So don't feel bad. But the thing is this: when people usually commingle, it also means that they have messy books, or they're not doing their bookkeeping. And it's going to be nearly impossible for you to be able to capture all of your tax deductions when you are using one account. Okay, because when it's like at the end of the year and it's time to do your taxes, you have to go back for 12 months of your personal transactions to try to pull out all of those business expenses, so that you're able to write them off as a tax deduction. And that's going to be really, really hard when you are commingling and everything is going to one account. So this is not something that you want to do. Okay. And also remember, it's really going to be hard to set boundaries and to set goals and try to set a budget when you have everything going into one account. And so you really don't want to do that. You really want to go ahead and have two separate accounts, one for your business and then one for your personal, so that you are able to capture all of your tax deductions and that you're able to know exactly what's going on in your business. Okay. So another thing, something else that I was guilty of, is when you withdraw money out as soon as it comes in. How many of you are guilty of this as well? As soon as you know you're about to be paid something, you go in and you take it right out. And listen, so transferring money before it hits the account good enough is something that is a no, right? So you don't want to do that because you're doing this and there's no system in place, there's no pattern in place. It's just an automatic transfer, right? Yeah, that's a no. So I would do this, and I know why, but you also have to consider this. When you're doing that, when you go in and you're yanking money out as your business is making money, your business is like, whoa, wait. What about a budget? What about your expenses that you have coming? What about your cash flow? Like, these are the things that you need to consider, all right? Because there are a couple of things that are happening here, and from the bookkeeping level, from the accounting level, it's going to make things a lot confusing when you have when you're withdrawing things before they even hit your account good. When you're going in and taking out, it's going to create a lot of more transactions. It's going to create a lot of more work. And when you pull from your business like this, you're not giving your business the opportunity to grow. You're not giving your business the opportunity to sustain itself because you are interrupting the cash flow. Yes, you're interrupting the cash flow. So another thing is this: when you are spending, when you're pulling money like this on the personal end, your spending is going up and up and up because you're pulling out instead of having those boundaries, around your spending. That's really important for your business and as well as in your personal, right? So when you're withdrawing money like this, those months, I know you guys have had months where you're like, I know I made money last month. I know I had sales last month, but I have no idea where my money went. and this is the reason why. It's because you're not letting that money settle to where you are able to build a cash flow. Okay? Because what's happening is that money is not really being monitored because it's not there. So you must begin to monitor your cash flow, and start setting boundaries around your spending. Okay. So another thing that I want to share with you that would definitely keep you from paying yourself is when you consistently invest, or when you constantly are investing into your business, just like Kim was. You feel like, I have to invest in order for me to grow. That's a true statement. And I don't want you to get me wrong and feel like that you should not invest in your business. You should definitely be investing in your business. But what I want you to also understand is that you deserve to get paid, right? You are the most valuable piece of your business. And we often believe that we have to pour everything back into the business in order for us to grow. But the truth of the matter is, you don't have to pour everything back into your business. Okay. So over investing in your business can definitely limit your ability to pay yourself as an entrepreneur, because a couple of things are happening here is that you're tying up your capital, you're tying up your cash flow, and that is definitely going to prevent you from being able to have the funds to really even pay yourself from your business. So it's good to invest in yourself. Yes, it's good to invest in your business, but the trick is this: to find that balance that is going to fit your budget. Remember, we talked about the boundaries around your spending. So you just need to find what the budget is going to be for you to invest in your business so that you can free money up to really be able to pay yourself. Okay. All right. So let's go to the next one. So another thing is this: ignoring taxes. Ignoring taxes is one of the biggest pitfalls that you want to avoid when you're talking about paying yourself from your business. And because, listen, we don't want any issues with the IRS, right? We don't want to have any type of IRS problems. And when you begin to ignore your taxes, that would be another sure way that is going to interrupt you from being able to pay yourself consistently. And a lot of entrepreneurs really get caught up on the estimated quarterly taxes. If you have to pay estimated taxes on the quarterly basis, if you owe a certain amount to the IRS, right? They expect for you to pay quarterly taxes. So if you owe, I think it's more than $1,000. If you file your taxes and you owe more than $1,000, that following year, they want you to pay estimated taxes. It's no way around that. Okay. Now another scenario is this: if you are operating as an S corp, you have to pay estimated quarterly taxes. It's a regulation for being taxed as an S corp. So if you're taking that election, then yes, you have to pay estimated taxes. If you do not, then you're going to have a penalty at the end of the year, and that penalty could be money that you could have been paying yourself instead of paying IRS if you had your business compliant. All right. So you want to be sure that you're not skipping over the taxes. Okay. So another pitfall is this: when you fail to track your expenses and your profits, when you do not have a good bookkeeping system in place, and you don't know how much money you're bringing in, you don't know how much money you're spending on a monthly basis, then that's going to be a problem. It's going to be hard to really determine how to pay yourself, because you need to know how much money you are able to pay yourself. And in order to really know your financials, in order for you to really know what's really happening in your business, you have to have some type of bookkeeping system in place. So a lot of entrepreneurs are like, hey, TK, when should I start bookkeeping? And I give the same answer. You need to start bookkeeping on the first day that you make your first business transaction. Because when you are receiving revenue or when you're having to pay for expenses, that is bookkeeping, because that needs to be recorded. All right. So when do you need to hire a bookkeeper? Then we need to revert back to your budget to see if a bookkeeper is something that your business budget can sustain. If not, then that means that you need to invest in one of the smaller systems, or maybe one of the free apps, or one of the free bookkeeping softwares, or if you just need to use spreadsheets. Now, that is something I don't recommend over a long term, because as your business grows, you're going to need to eventually hire a bookkeeper. All right. But if you're still like on the smaller scale to where it's something that you can manage, you need to have bookkeeping on day one. All right. So let's just recap a little bit. Some of the pitfalls that could be hindering you from being able to pay yourself is commingling, withdrawing money as soon as it comes in, constantly investing, ignoring those taxes, and failing to track your expenses and your income, not having bookkeeping. Those are all the things that will hinder you from being able to pay yourself consistently. All right. So I want you to be able to get on a path to consistent pay. So let's talk about some numbers or some more information to for what you're going to need in order to create a consistent owner pay schedule. Okay. So number one is this: you're going to need to know what your net income is. You remember we talked about this in our definitions. Your net income is everything. You have your gross income minus your expenses. That is going to equal your net income. And so you need to know what this is. There's no way around it, because this is going to be how we start to calculate how much you need to pay yourself. So again, you need some type of bookkeeping system in place where you're able to track your income and track your expenses, so that you continuously know what your net income is, on the monthly basis, on the weekly basis. You will know what this is. All right. So how do you figure this out again? So the thing you want to do is you want to add up your total income. That's all the sources of income you are receiving in from your business. Okay. So any type of income, whether they're different streams, all your income that you are receiving from your business, you need to add those up. Subtract your business expenses. So that's all of your business expenses. And then you're going to calculate your net income. Okay. So the next thing you're going to do, again, this is probably everybody's least favorite thing, but you want to figure out how much you need to pay in taxes on your net income. And again, in order for you to figure out how much you're going to owe in taxes, you have to know what that net income number is, okay? So as soon as you have your net income calculated, you need to put money aside, put money away for your taxes, okay? So you need to talk to your tax professional. If you have a good relationship with your tax professional, you should be able to go to them and say, hey, can we please figure out how much I should really be setting aside for my taxes on the quarterly basis? And so a good rule of thumb is usually 25 to 30% is the rule of thumb. However, that could change based on what entity you're in and also what your expenses look like as well. Because you want to set aside the 30%, yes. Like you want to have that in your bank account at the end of the year so that you're not having to, rush and try to make up the money to be able to pay off a tax bill. But if you're saving this money throughout the year, at the end of the year, you would have, this already in the account. You're just waiting to know what the exact number is. Another thing is this. You want to ask your tax preparer if you are able to do any type of tax strategies or tax planning. With my clients, we usually do tax planning around October, November-ish, so that we can kind of get an idea if we need to do any type of strategies or make any type of adjustments, all right? And so you're able to do this before December 31st. After December 31st, it's really going to be hard for you to try to do any tax strategy because after December 31st, it's basically tax evasion and you don't want to get into that, right? Because that's totally illegal. But you want to be able to tax plan so that you're able to do tax avoidance. And that's totally legal as long as you're doing it before December 31st, okay? So you want to be able to talk to your tax accountant or your bookkeeper about ways that you're able to really save on taxes, because if you have the 30% left over at the end of the year in an account, and if you're able to implement tax strategies like write off a lot of expenses and be able to break down any type of tax liability you may have, then you won't have to send over the entire 30% that you have saved throughout the year. So that is the end goal, and that is the thing that you can do for that. So I do recommend talking to your tax professional about that, all right? So another thing that we have to deal with that we don't like to deal with is business debt. Just like business taxes, nobody wants to talk about business debt. But when you have a business debt, it can affect how much money you can pay yourself, obviously, right? Because the business debt payments really can eat up the profits that you will otherwise be paying yourself. And so it's important for you to manage your debt wisely and ensure that you have enough cash flow to be able to pay yourself as well, okay? So listen, so the distance we're trying to go, right? And the impact that we are trying to make, we really have to be mature. We have to be responsible about how we are handling our business debt, how we are handling our taxes, because those things are really not pretty when it comes to building a business, but it is so necessary that we deal with them correctly, all right? So what are you going to do with your business debt? We have to decide, or we have to calculate how much business debt you have, okay? So you have to gather all of your business debt statements, and then you want to decide how much do you want to pay off in a certain amount of time. So if you're looking at, okay, I want to have everything paid off in 12 months, you're basically going to divide that business debt by 12 months to calculate those payments and pay them off as soon as possible, okay? So with the business savings, this is something that I like to talk about, because when we were talking about over investing, if you know you want to do things throughout the year, like if you're saying, okay, I want to go to a conference, or I want to be able to take a vacation, or I want to, put some money aside for in the case if I'm sick, or in case of a child is sick and I cannot work, you want to have some type of cushion, okay? So you want to be able to have a business savings for any type of emergencies or whatever the case may be. And so how do you decide how are you going to save for your business savings account? So you want to figure out all of the expenses that you have on the monthly basis. So if you know that, for your office rent, for your assistant, for whatever you may have, you want to calculate what those monthly expenses are. So if you're coming up like, $3,500 a month, of expenses that you incur on a monthly basis, you want to be able to save that amount. You want to have at least like 6 to 12 months of business savings. Okay. So that is something that you would need to set aside and begin to save for. So in the case of a vacation, you want to take a vacation or a conference or a sick days, you would have that money already in your bank account. Okay. So here's something else. This is where your dance begins right here. So if you're like me, when it comes to dancing, it takes a minute for me to get the beats, to get the rhythm. And this is how it's going to be when you're trying to figure out how to pay yourself too. Okay. Because what I want you to now do is to look at your personal budget. Okay. Because we're going to need to know this number to figure out what your baseline is going to be. So a lot of people may have different situations. Some people may have full-time jobs. Some people may have, a spouse that pays half of the household expenses. Some people may just be full-time entrepreneurs, and so they are, dependent on the money that their business generates. So you need to be able to look at your personal life, at your personal budget, and figure this out, because you're going to need to calculate your monthly expenses. Okay. So now I want you to add up everything that it takes for you to live, like your mortgage or your rent, your utilities, your transportations, for food, healthcare, insurance. How much of that, what is your share of that, of your living expenses? So if you are just, you're single and you pay for everything, then your share would be 100%. Okay. So that means that after you add everything up, it's 100% is on you. Now, if your spouse, pays half of the rent, half of the utilities, I just want you to add up your share. How much money does it take for you to be able to live on the monthly basis? What is that number? All right. So after you figure out your share of your living expenses, maybe it's 100%, maybe it's 75, maybe it's 50%, but what is that number? Okay. So after you have figured out that number, I want you to add in all the extra expenses that you do. Like if you like to eat out, if you like to travel, if you like to, go to the movies, how much of that is your share? If you or if that's 100% on you, I want you to add that number up and add it to your living expenses. Okay. So now that you have your living expenses and your extra entertainment expenses, I want you to add that together, and this is going to be your bottom number. This is where you are going to start with having your business pay you. All right. This is going to be your bottom number for your compensation. So if you're saying, hey, TK, I am single, I pay all my bills, and my bills come up to $3,500 a month. All my bills and my extra expenses for me to, go out, have fun and party or whatever. All of my bills are $3,500 a month. Okay. And I know that's a low number. I just pick the first number that came to my mind. So whatever your number is, I want you to write that down. Okay, because that is going to be your bottom line number. This is the minimum that we want to request from our business to pay us. Okay. So what is your required compensation to cover your living expenses? Again, this is your baseline, or this is your bottom line number. Okay. So if we say that is going to be, let me get my calculator. We're going to say that is $3,500. Okay. Now I want you to ask yourself this question. What is your desired compensation beyond your living expenses? Okay. So let's say, okay, my living expenses is $3,500. That is the minimum I want my business to pay myself. But my desired compensation, for the sake of small numbers, we'll say 5,000. I want my business to pay me $5,000 a month. Okay. So then the third question I want you to ask yourself is, how much do I need to earn in order to reach my desired compensation? So if I'm saying my bottom number, my min, for me to be able to still survive is $3,500. I want my business to at least pay me $3,500, but I would like to make $5,000 a month. And I'm sure your numbers are much larger than what I'm saying, but for your desired compensation, we're going to say $5,000. So that means that I need $1,500 more, right? I need $1,500 more in order for me to reach my desired compensation. So after you write down how much more money you need, I want you to put 6 to 12 months, because that is going to be your goal. Okay. So if I need $1,500 more, I need to figure out, how am I able to make this $5,000 that I want to make from my business? Then I need to figure out how to do it within 6 to 12 months. Because anytime you give yourself a goal to do something, you also need to put a date on it, right? You need to put a time frame on it to say, okay, I want to have this done within 6 to 12 months. So this means within 6 to 12 months, I am going to be making my desired compensation of $5,000. Okay. And then you want to put in the how you're going to do that. You're going to put in the steps to how you are going to reach that goal of $5,000 a month. Okay. So just to go over through this again, what is your required compensation for you to cover your living expenses? What is that baseline number, or what is that minimum compensation that you need from your business? In our scenario, I said $3,500. Okay. And then what is your desired compensation? In our scenario, I said $5,000, but I know yours is going to be much bigger than that. And then I said, how much do you need to earn to reach your desired compensation? And mine was $1,500. I need to figure out how am I able to make an extra $1,500 so that I can reach my desired compensation of $5,000. And I need to be able to do this within 6 to 12 months. And so I will go through this thoroughly on my own to figure out what type of services or what type of product I am able to implement so that I can make this additional $1,500 so that I can reach my desired compensation that I need from my business. Okay. So I hope I did not lose you there. But that is how those would be the things that we want to outline to really get a good focus point on what we want from our business. All right. So you're probably like, but wait, TK, because I don't have enough money to meet my baseline. My business is not generating enough money for me to even cover my living expenses. So that's totally fine, because what we are doing is we are trying to, number one, build the muscle for you to start building a consistent owner's pay, right? We want you to start knowing what it feels like to send yourself a payment for the services that you're giving for your business. And so you may not be in the space to where you can cover your living expenses just yet. And so we do have a plan for that in the case if you're not able to even cover your basic living expenses. And so one of the things that you want to look at is you want to be able to review your expenses. That means to go back through your budget, because I know, like, for me, at one time I had so many apps and I had so many subscriptions for things that I was not even using anymore, right? They was just still taking the payment out, and I was like, what is this even for? But it was from apps that I was no longer using. And so you may be able to look in your expenses or to look into your budget as well to be able to identify things that you may not even, no longer need. And so that would be one of the things that you can do, is to look through your expenses to see if there's anything that you are able to cut or reduce or, overall just, take out altogether. All right. So another thing is to look at your pricing. Is there anything that you could be underpricing in your business, especially when you are starting off, right? When you first start your business, you try to just price things in order to just get clients or get customers. But is it something that you could now raise your prices in? Are all of your pricing compatible to other people that are in the same industry as you? And so you want to be able to look at your pricing strategy, look at the product or the services that you're offering to see if you are at market value or not. And if you're not, then you are able to raise those prices a little bit. Okay. So another thing is also, ramp up your marketing and your sales strategies. Maybe you need to do some promotions or some new marketing, or, partner up with someone else that will be able to help you and assist you into getting more customers. And so these are ways that you are able to, bring in more revenue so that you are able to contribute more to your owner's pay, not for you to reinvest, but for you to contribute to your owner's pay so that you can at least get to that point to where your business is able to at least cover your living expenses. All right. And if you're not there yet, one thing that I also suggest, if it's something from your personal life, like if you're saying, okay, I'm going to have my business pay for my cell phone. Every cell phone payment goes to my business. Now, what you would do is you would make a transfer from your business account to your personal account and then pay your bill from your personal account. All right. So it's kind of like your business is paying you something, even if you're not able to get to your baseline number yet, or to your living expenses number yet, until you do some of these action steps. But have your business pay or cover something for you in your personal life so that you are still building that muscle that you need to build. Okay. So just start with something. All right. That's the goal, is to just go ahead and start with something if you're not at a position to where your business can cover your basic living expenses. Okay. Because it is time to start getting paid, right? And I want you to get on this journey to consistent owner's pay. So let's recap. We calculated the net income. We calculated and talked about the business taxes and business debt. We created a business savings, and we determined what we need for our business to pay us. We have determined what that minimum pay is. We determined what that baseline pay should be, right? For you to cut, for your business to cover your living expenses. So now we need to talk about how often do we pay ourselves, right? So you can pay yourself once or twice a month, like whatever you decide to pay yourself, just stay consistent with that number. So if you're saying, okay, my business is going to pay my living expenses, which is $3,500 a month, and then I guess it really depends on your cash flow though. If you have enough cash flow, you would have your business pay yourself twice a month so that you're not taking all of the cash at once, and then you're like, penny pinching until you get more revenue in. So you want to look at your cash flow to see should you do it once or twice a month. But whatever you do, just stay consistent with that schedule, okay? And then also stay consistent with the date that you pay yourself, whether you're doing it on the 1st, the 15th, the 5th, the 20th, whatever. Just mark it off on your calendar and say, okay, every 30th or every 20th of the month, this is when I get paid. All right. You should go ahead and hype yourself up and get excited about it and say, yes, I am getting paid this Friday from my business. And I want you to stay consistent with that. All right. I want you to stay really consistent with that. Okay, so how do you pay yourself? You can automate it. You could write out a check for yourself monthly. And again, this goes back to how your business is structured. All right. So if you are a sole proprietor, or if you are a single member LLC, then you can make those automatic transfers. You can write yourself a check. And the same thing for an S Corp or a C Corp or a partnership. You can write yourself, well, not a partnership, but you can write yourself a check, or you can just send automatic payments. Now, with an S Corp, you have to have yourself on payroll. So you would actually go through a payroll system. For a single member LLC or a sole proprietorship, you do not have to have yourself on that payroll, but just be consistent with how you're sending yourself money. Okay. So here are the tools that you need, that you are going to need to stay consistent with paying yourself, right? With staying consistent with that owner's pay. So again, it's definitely bookkeeping, because you need to get that clear and accurate insight on your business financials. This is going to help you understand your cash flow and your the profits that you are making, because you want to ensure that you know when and how much you were able to pay yourself. So the bookkeeping is just simply going to give you the clarity that you need on your numbers. Okay. Something else that I suggest is definitely a business budgeting. We talked about putting the boundaries around your financials, around your spending, because this is also going to give you a better grip on your finances, that you know how much you're spending, how, if you're overspending, or if you're, if you then really be able to tell you exactly how much you're able to pay yourself and set aside for yourself for your owner's salary. All right. Another thing I suggest is a consultation. This will help you establish your pay strategy and make sure that it is in line or aligned with your personal needs as well as your business goals. Okay. And then you need some type of calendar reminder, because we are going to set the reminders on your calendar so that you're able to review your financials and then process your payments. All right. So you want to be on time and on schedule with those things as well. Okay, so that brings us to the end of our masterclass for today, or our chat for today. But guys, I want you to know that if you want to work with us, we have different outlets, or we have different different types of I don't know what to call them, different types of consultations that you can get on. First of all, we have the Barlow Group Financial Circle. This is basically a membership that we are about to launch. You know, sometimes entrepreneurs are not they don't have the budget right now to be able to hire a bookkeeper. However, they really need the consultations. They need the walkthroughs. They need like webinars like this that will help them sustain their financials, and as well as, to keep themselves on a consistent pay. And so we have this group to where we are bringing you the tools, the resources, in order to help you stay compliant and organized in your business. And that is the Barlow Group Financial Circle. Then another thing that we're offering is a budgeting consultation. We talked about budgeting a couple times within this mastermind, and we do have that opportunity available. If you need to really sit down with us, we can do it in person or on Zoom, to where we're going through your financials to really help you get a grasp of your money, to see what's really happening there, so that you're really able to pay yourself, right? And then another option that we always have is the business bookkeeping and tax package. This is where we combine monthly bookkeeping with the yearly tax prep. So on the monthly basis, you're getting the bookkeeping, all of the things that you need as far as keeping you compliant and organized with your finances, and as well as bookkeeping. And then at the end of the year, you don't have to make a tax payment, because you've already paid for your tax preparation services throughout the year. And so it's just an easier transition, because we already have your numbers, we already know your profit and loss, and so we go ahead and process your taxes for you at the end of the year. So if you need any of these things, you are able to scan this code here, and that is going to take you to our calendar. So go ahead and get on the calendar, that we can talk about how the Barlow Group is able to help and assist you with your business finances, so that you can get on the path to consistent pay. So guys, listen, so I have enjoyed myself sharing with you. I hope you have learned something. I hope we were able to give you more clarity on how to pay yourself successfully, right, from your business. So I hope to see you soon. In the meantime, thank you so much and cheers to your success. And I'll talk to you later. Bye-bye.